Namaskar, मैं CA मनमोहन जिंदल. I shall discuss today on valuation. A small disclaimer: this information is for knowledge and awareness only. Kindly go through the valuation standards, etc., for taking the action. It is not a solicitation in any manner or a authentic guidance. What is fair valuation? What is fair valuation? The price that would be received to sell an asset. Means what price we are receiving to sell an asset, to part an asset, or paid to transfer a liability in an orderly transactions. Means when we are disposing of our liability, suppose I have to pay ₹100 to any person, but I am settling him, or so I am giving him 98. So that is also a valuation in an orderly transaction. Means according to law, according to the law of land, according to the mutual understanding, etc. Between the market participant. Market participant should be aware about the market at the measurement date. Means on which date this all is happening to measure. Here, valuer has to perform key roles to arrive at a fair valuation. So, valuation is not an absolute concept. It in merger and acquisition, etc., it is not 2 plus 2 is equal to 4, but sometimes it is 2 plus 2 is equal to 5. One is called synergy. It is an estimate of most probable of a range of possible outcomes based on assumptions made in the valuation process. Means if one valuer is arriving at a certain cost, so in specific circumstances, other valuer can be more or less. The valuation of a company, business, asset involves the use of judgment, experience, and knowledge. So, valuer's judgment, experience, and knowledge is very important. The valuer undertaking this work should possess knowledge of the analysis and interpretation of financial statements backed by a practical appreciation of business affairs and investments. A valuation based on quantitative information alone may not be adequate. Means, again, there are a lot of other circumstances affecting the valuation, circumstances, etc., etc. Other factors such as perspective of value, purpose of valuation, what is being valued, premises of value, premises of value, and date of valuation play a vital role in a valuation assignment. Suppose nowadays, if a property is valued in Ukraine, what would be the value? But just 1 year before, the property have the huge value. So circumstance has changed the value of an asset. So why valuation? We need valuation in the following circumstances: business and transaction valuation for taxes and liability requirements, value of intangible assets, goodwill, patent, trademark, to transfer or to value the same, valuation of shares to purchase, to acquire the stake in another company, human resource valuation, fixed asset valuation, inventory valuation, merger, acquisition, reconstruction, and amalgamation to pay off the shareholders of the other company. A certain valuation is required. Asset valuation shall also cover fair valuation as per Ind AS. Valuation under IBC Code 2016 for resolution, liquidation, for corporate debtors, and for banks, etc. How to pay off their dues. So enterprise valuation, when a and whole enterprise has to be sell or purchase. What is the fair valuation? What is the liquidation valuation? Assessment of property transition for village panchayat, municipal corporations, state revenue taxes, vehicle road toll taxes, and allied requirements and allied. Registration and court fees allied, on which value the registration and court fees are levied. Somewhere it is, you have seen that circle rate on the property valuation is a example of this. Valuation under direct taxes, how to value capital gain, transfer pricing, comparable uncontrolled price, cost plus method, resale price method, profit split method, transaction net margin method, indirect taxation. These are also the methods to value the cost. Valuation under indirect taxation, GST Act valuation with rules framed there. So, to whom the valuation is required, and for other matters, implied stock ownership plan, damage assessment, dissenting shareholder action. Sometimes a property, a business is purchased, and somewhere some shareholder don't want to uh, depart their shares at the value arrived. So how to deal with them? Dispute resolution mechanism for arriving for dissenting shareholders' claims in arbitration or out of court settlement. Valuation is required. Marital dissolutions, solvency and fairness options. In all matters also valuation is required. So to whom? Who are the stakeholders want valuation? It may be individual, family, HUF, AOP, firms. Firms may be registered, unregistered, LLP, public and private trust and trustees, limited company. They may be listed, unlisted, private and public sector undertakings, and independently owned and operated by state and local bodies. It covers for measuring, accounting, disclosure of implications for impairment, fair value measurement under various Ind AS requirement, IFRS, or other allied requirements. So, valuation is very important in day-to-day life to dispose of number of litigation between the stakeholders. Valuation is not just the array of figures, but it's a special knowledge, wisdom of arts, science, and social economics, though adherence of local laws, regulations, and many human and potential hidden dimensions. Valuer has to use assumptions, facts, figures, circumstances, and many such aspects to conduct an valuation to arrive at a fair valuation. Thanks. Thanking you.